Friends, welcome on stage. Karibuni sana. Glad to have you on set. Let me just quickly start with Madam Hellen seated right next to me here. Having followed through the presentations, the engagements we've had, what are some of your key reflections, key takeaways?
Thank you very much. Some of my key takeaways are I've seen the importance of having data analytics. I've seen the benefits that it's accrue to the bankers when they utilize these analytics. And for us, even at KDIC, we also use the data warehouse, where, as you are aware, all the 52 institutions, banks and microfinance banks that are regulated by the central bank are our members, and we receive data through the electronic data warehouse to our system. And that is how we are able to do early warning system to determine how the health of the institutions that we cover as a deposit insurer. So at the end of every day, I'm able to look at the dashboard and be able to see through the Camel ratings or whatever analytics how the banks are doing, and therefore how our fund is protected or the likelihood of a bank failure. So for me, my key takeaway is that it is very important, as the last speaker has said, that if we want to walk far, we walk together. I'm glad to hear that 16 banks are already on board with this. It makes it easier. I am not a regulator, but per se, but by virtue of receiving data from all the commercial banks and microfinance institutions, it makes it easy for purposes of comparing or analyzing to have all that in place. Thank you very much.
Thank you, Madam Hellen, for your introductory thoughts. Let me cross over to Sharad. With the data becoming the new frontier and the criticality displaying, how do you think the uptake of this analytics is now shaping the banking sector across the country?
I mean, look, I think if you were to sort of look at banking sector as a whole, right? I mean, I think if you, so one is Africa is a large continent, right? There are 54 countries. Each country is very different. Some of us who have actually not lived in Africa tend to think of Africa as a monolith. The reality is it is a collection of very different countries. Some countries are way ahead. Some countries are still sort of charting the path and the journey. But if I were to specifically talk about East Africa, talk about Kenya in particular, I think some of the advancements in analytics, data and technology that Kenyan banking sector has seen is way ahead of what the banks have been able to achieve in some of the other markets, right? So we as a firm operate out of UK, operate out of Dubai. I think, listening to John earlier in the keynote address, the way the banks here are using analytics to actually serve their clients, take underwriting credit decisions, is still a conversation which is in very nascent stage in the Middle East, in Europe. In Europe, banks are being pushed by neobanks and fintechs to actually innovate and move forward. But here, I think the country and the region has actually leapfrogged the entire internet and digital revolution and straight to mobile, given the way how the mobile networks and mobile penetration develop. So on the mobile technology side, on data engineering side, some of the work that is happening here in Kenya is actually quite outstanding. One of the issues which we all need to sort of think about, and this is something that we talk to our clients on a day in, night out basis, is quality of data is an issue. And quality of data is if that makes you happier or less sad, the quality of data is an issue across the board. You look at banks and companies in the region, you look at banks and companies in Middle East, in Europe. That is one big issue that most people are facing. And when people talk about AI transformation and adaptation of AI, one of the key challenges is, and we can talk about that more later, is what is your raw material for AI? Your raw material for AI is data, and if it is garbage in, then it's going to be garbage out. So as companies and banks and financial institutions think about AI adoption, AI transformation, the fundamental block of that is data, and that is something that they need to think about in terms of fixing the data quality.
So the point there is that data is the raw material and quality of data becomes central in this conversation. Switching over to Aijaz, how much of an influence does your bank's data have in terms of helping your teams with insights to your decision making across the board? Is a data-driven culture creating an impact in your bank's bottom line?
So let me start it this way. I think a couple of decades back, the technology function, the IT, was seen as a support function. Now you can see the CIOs are part of the strategy decisions, right? And same is the story on the analytics happening now. Okay, I'm not just talking from the SBM perspective. I'm talking from the banks I have worked also and the successful banks. Now it has evolved from one-man show in maybe finance department or some business units here and there to a full-fledged analytics department, and it's quite essential in successful strategies. It's not only insights from the customer perspective. We derive insights from compliance, regulatory risk perspective, business perspective. So in today's world, I think even in East Africa, the leading banks, the successful banks, have matured to the extent that we don't only derive insights from the structured internal data. Now we have the means to gather the external data and have the tools and the skills to derive insights from that. So it's maturing. It has matured a lot. It's still maturing. But I don't think we in East Africa are behind the rest of the world as far as data analytics is concerned. We are taking lead a decade back, and we have evolved to a large extent.
All right. Suki, so managing risk is a very pivotal pillar in this conversation we're having. And I'm very curious as to how Sunoida Solutions then help banks, whether it is plugging revenue leakages or any other risk and how they manifest. How do you go about that?
So look, revenue leakages, Julian, is a problem not isolated for the banking industry. It's there in every industry in the world. But I think with the increase in the number of channels now in banking, it's become a larger issue. And most banks, and also for people who may not appreciate revenue leakages and revenue assurance, it is a combination of three pillars which cause those leakages. It's not only technology. Most people sometimes think it's issues in systems. It's a combination of technology, a failure in a process, or a failure by certain people in the bank, which could be a human error, an issue, which cause these leakages. And when we were discussing with our banks, most of them did not have any automated platform to address this area. Mostly they were using their auditors to do a sampling of data, end of the quarter. But that's not good enough in today's times, because you can't go back to your customers and recover it after 3 months. If you try to do that, you're going to upset the customer in the process as well. So with the revenue assurance platform, we've been able to cover that risk for banks, to be able to put an automated platform where on a daily basis, they are able to get revenue leakages at a transaction level so they can address those gaps. And moving forward, those issues should not appear again, which has an instant impact on the profitability of the bank on one hand, improves the customer experience, but also very important factor there is the compliance issue. Because all banks have standard published tariffs pricing for products and services, and if they by mistake overcharge a customer, that becomes a compliance issue as well. So idea of this platform is to, and how we help banks, is to give them the peace of mind, because today they only have their core banking system to rely on in this area. So we provide that validation layer and an additional layer of audit in an automated way, which helps them in that area.
Thank you for that, Suki. Any questions from the floor before I get to my second round? Based on the presentations you've had, the conversation we're having right now, any emerging questions? Right, let me go to my second round. Coming back to Hellen, I know you gave the caveat that you are not a regulator, but the regulatory environment is evolving significantly. And I'm very curious as to how you feel banks should then position themselves. We have seen developing requirements around recapitalization, whether it is in Nigeria, Ghana, or in Kenya, as we are seeing right now, and many other regulatory issues, especially even around AI, climate change disclosures. How should banks then position themselves in light of this evolving regulatory landscape?
Thank you very much. I will look at the challenges in three ways. One of them is the dichotomy between innovation and compliance. That banks tend to want to do lots of innovations, and yet this brings about challenges in their reporting or in managing compliance. There is high penetration and adoption of new technologies, the mobile money, M-Pesa, fintechs, digital banking, and all that. So all this, and alongside the regulations, the regulators that are with us as banks, the Central Bank of Kenya, issues on anti-money laundering, the financial reporting, and the Capital Markets Authority, even us as KDIC, all those bring about huge burdens on the banks in their reportings. The issues of the Data Protection Act and other complex issues that creates complex compliance requirements in that landscape. So that is one of the challenges. The next one I would look at is the technological investment and systems integration and the issue of cybersecurity. I think Suki has mentioned on that as well. I consider that as one of the challenges that the financial sector is facing, and also on data privacy because of the requirements on those reportings. The other one is on real-time reporting requirements and the data quality. So because of the nature of data that is churned out by banks on a daily basis and the expectations by regulators on their reporting and the accuracy of that data, it is very critical to have a system or a solution that is able to make it easy. And especially for institutions or banks that are reporting to multi-regulators. For instance, commercial banks are reporting to KDIC and of course their regulator, the Central Bank of Kenya. So if there is a way that makes it easy for them so that at the push of a button, they are able to send all the compliance requirements, it makes it easy for their work. Thank you.
Thank you, Madam Hellen, for that perspective on the regulatory environment, the emerging challenges, and how banks can cope with that. Sharad, we've talked a lot about AI this evening, and what does this mean, and how is it recasting analysis within the banking sector?
So I graduated in 99 when I started my banking career. So for some of us who are old enough to remember 99, that was the peak boom time for .com. Right. In 2000, obviously, the markets crashed. There was a lot of companies got burned down. But the reality remains that in the last 25 years, internet and .com has fundamentally changed everything for us. Right. The way we commute, the way we communicate, the way we transact, shop, travel, eat, so on and so forth. In my mind, this is the 99 moment of AI. Whether we like AI, we don't like, whether we embrace it, we don't embrace it, reality is going to change everything. And that's going to have an impact on the banking side as well. However, as we saw the euphoria in 99 around .com and everybody was sort of rushing into .com, really, without really thinking through it, we see some of those signs in the AI space as well, right? I mean, a lot of managements that we talk to wants to do something in the AI space, not really thinking through what are the use cases they want to solve, what are the real problems that they want to solve, what is the return on investment, what is the strategic objective. But we have to do something in AI just because AI is the buzzword and nobody wants to miss the boat. And that is something that we all need to be cautious of. But the reality remains that AI is going to change fundamentally everything. If you look at banks, for example, right? AI today is being used, and John did talk about it, Sukirat did talk about it, is in hyper personalization of services for customers, right? It obviously has an impact on customer service, it has an impact on customer retention and revenue from the customer. From a risk management perspective, today, alternative data and AI is being used to evaluate credit, right? I don't have to, as a corporate banker or a credit analyst, I don't have to wait till the end of the year for a company to submit an audited balance sheet for me to analyze and see how it stacks up. Today, I can do credit analysis of a company almost on a daily basis, almost on a real-time basis with the kind of data that I can capture on the company. Fraud detection, the data that you capture today almost gives you a real-time information on fraud detection. Operational efficiency. I mean, today, most AI which is being sort of used by banks and financial institutions is around operational efficiency. ChatGPT has sort of fundamentally changed the game, and more so in consulting and in legal services, but also in banks and financial institutions. But I think the issue with AI is, and this is something that I touched about in my previous sort of response to your previous question, is what is the quality of data that we are feeding into AI? What is the raw material for an AI program? It is your data, and how good the quality of data is will eventually decide whether your AI implementation, AI transformation is actually successful or not. I mean, we worked with banks and financial institutions where, in a slightly different context, not really in an AI context, but just by fixing the quality of data, we were able to improve the capital adequacy by 17, 18 basis points. I mean, for large institutions, that's a hell lot of money. So having the quality of data sort of becomes key in terms of how you manage your AI programs, but the reality remains that AI is going to fundamentally change everything. In 3 to 5 years from now, banks and financial institutions, you will see there is a clear divergence in the performance of banks and financial institutions which have actually implemented a successful AI program versus banks who have not been able to implement it. So jury is still out, but AI is for real. And you know, I must admit, I mean, I keep coming back to the keynote address given by John. I mean, I think a lot of things that he did mention were kind of resonate with us, and they're actually very fundamental. All of us actually should take a copy of that speech and read it and reread it to sort of understand how things are changing.
Sharad, allow me to stay with you for a bit. You have recurrently mentioned this thing of quality of data.
Yeah.
For the avoidance of doubt, what's good quality data, what's bad quality data in 30 seconds?
I think Sukirat touched upon the data quality issues from a revenue assurance perspective, right? I mean, I think so there are 3 or 4 different issues that we see in banks and financial institutions, right? Just operational errors. The data has not been fully captured, not been fully entered in the system. So for example, I'm based out of Dubai, and Muhammad is a very common name in the Middle East, right? You have 10 clients, 15 clients, 20 clients with the same name. How do you sort of put a key identification number against them? So it could be their ID, it could be address. All of that is missing. Just so you really don't know which Muhammad you are dealing with. Issues around in a corporate banking context, issues around collateral management. If there is a piece of collateral, it has not been inputted correctly. If there is a piece of collateral which is applicable for more than one credit line, it is inputted in one credit line, and all the other credit lines are showing as clean, which sort of leads to a higher RWA. Things like incorrect product tagging. So if you have a trade finance loan, instead of putting it as a trade finance, you put it as a term loan, which attracts a much higher RWA, leading to cost and cost escalations. So a lot of this stuff is actually basic grunt work, hard work. Someone has to roll up the sleeves, sit into the trenches, and actually clean up the data within the organizations. Now, in Kenya, because it's sort of in some ways it kind of leapfrogged the entire internet revolution and straight away move to mobile, I think I suspect the quality of data is probably better here. But I must admit I have not really looked at it. But I'm talking about quality of data more from a perspective of banks in the Middle East or in Europe, where we have extensive experience with.
Thank you for that. Aijaz, with emerging AI-driven strategies driving a whole new level of data analytics, will this make current systems obsolete in the days to come, or will AI complement and build on the technology of today?
Great. But before taking this question, I think I'd like to revisit the previous question, how SBM uses data, because I just saw my head of analytics round. Mr. Davis is here. So I would put in a simple one single statement the response to the previous question, right? So the response is simple. Our strategy meeting without stories drawn from data by Davis won't work. Our strategy will not work. Our weekly excos without his insights from the data are meaningless. It's as simple as that. So coming back to this question now, see, AI definitely will have both disruptive impact and enabling impact on different technology platforms, different job areas, different functions, right? So though there will be disruptive on many, but on the data side, I don't think it is going to be disruptive. It's going to be enabling. It's going to be augmenting. And many platform on the data side, owners or providers have already started embedding AI into their platforms, and quite a number have advanced. I can see with Sunoida taking a leapfrog in that direction, embedding AI into the platforms. The mantra is embed, upgrade, embed. So AI, you don't look in isolation. Okay, AI has to be part of the systems you have currently on. So on the data side, see, the key area is when we talk about data is we work on voluminous, complex data. So what matters is the speed. Okay, with the current technologies, the platforms, the speed is an issue on the complexity, the volumes, okay? But AI is going to come handy. So people on the data platforms have to embed AI to address the speed, okay? And AI is going to handy. Second, on the data platforms is the accuracy, okay? How accurate the predictions are, okay? How accurate your insights are. Again, the machine learning algorithms, they are self-learning algorithms. You can improve the accuracy with the AI, embedding AI into it, right? And third, I see it may impact the data scientists. I think my CFO, my people in the finance, my people in the operations will become data scientists, in the sense that AI will democratize the data, okay, when you embed into the current platforms, right? So those are the key areas. So it may not displace or disrupt the data platforms, but it will enable and augment them.
Okay.
That's my take on that. Yes.
Thank you for that. Before I come to Suki there, any questions from the floor? Any questions on the discussion, the presentations earlier, AI banking, any emerging? Is there a hand at the back? Oh no, I thought I saw a hand somewhere there. Okay. There's none. This side? Yes, there's a hand here. Please introduce yourself and just shoot your question.
Okay, my name is Nelson Okech from I&M. My question goes to Sukirat. Yeah. Okay, just on a lighter note, sometime in 2022, there's a presidential candidate in Kenya who said that a country like Congo does not have any cows. So in relation to that, and also based on the hearsay about a Democratic Republic of Congo, I believe you've also invested in the DRC as well. I'm told that in DRC, if you look at the population there and the data in that country, it's not in an organized way. Guys don't have national IDs. Probably they're identified by the birth certificates and other funny documents. So how do you handle data in such a country? Yeah.
Thank you, Nelson. So, in the true sense of what happened, let's say the example you took for DRC, there were two things which helped us a lot. You may not like the first one, which I will say, which was COVID-19. And second one was having a customer like Equity in Kenya. So our entry into DRC became a lot more easier because of both these factors. Because of COVID-19, there was acceptance at that time to be deploying solutions and working with the teams in a lot more efficient manner, even remotely. I think that helped us a lot because otherwise there were some entry barriers to deploy teams there, stuff like that. And secondly, I think Equity Bank's vision on this in terms of their own plan and charter, because they had acquired this large financial institution and a very promising institution because it's one of the largest banks in the country. And they wanted, after the success in Kenya for revenue assurance, they wanted to get visibility for DRC as well. So having a good customer relationship with Equity actually was the main reason for us to be successful in DRC. I'll be in a better position once we work with a few other banks there to see how the situation is. So at this point, and DRC team is absolutely efficient in terms of what we've done because the project went successful, on time, and giving them the benefits they were looking for.
Thank you for that response. Any other question before we close? Yes, there's a hand here. You know the drill, introduce yourself first.
Thank you. Peter Lando from Andem Bank. My question goes to Mr. Sharad. So, is there a quantum of AI? How far can you go with AI? How do you strike a balance with AI? For instance, in an organization like a bank, can you quantify and say, this is how much you're going to rely on AI, and this is how much you're going to maybe hold back?
So if I understood your question correctly, so what you're saying is how do banks and financial institutions manage a balance between AI and human interaction, right? Look, I mean, I think there are certain areas which can never be replaced by AI. I hope they cannot be replaced by AI. Who knows where the technology is going. Relationship management. A lot of stuff that Sukirat talked about in his initial presentation about putting customer first, building customer loyalty, having fans, with customers becoming your fans. I think that cannot be done through AI. I mean, that can be done through human connections, through relationships. I mean, there's a reason why so many of us have gathered here in this event, which is being organized by Sunoida. I mean, it has nothing to do with AI. It is purely human relationships. Understanding of the customer, what the customer actually needs. You need people to be able to think through, to sit in their shoes, and think through some of the issues and challenges that customers are facing, and how can we solve them. Some of the areas where AI will just completely take over is analytics, is around data. I mean, what do you do with data? How can you use data to come up with better insights? There AI is going to take over completely. It is already taking over, and you know, and this transformation is going to happen very, very quickly, very rapidly. Hyper personalization of services, credit risk management, cross sell. What can I cross sell to a particular customer? So the data and the insights from the data will come from AI. The application of those insights, how do I go and sell another product or a service? Although I know and I understand that this company needs this particular advice, or this individual needs this particular solution, how do I go and sell it to that? So that personalization, relationship management, relationship building will always have a human impact, will always have a human touch, which I don't think, at least I hope not in my lifetime, can be replaced by machines.
Thank you for that response. Friends, in the interest of time, allow me to...
If Julians, if I can just add one point to what Sharad had said to the gentleman's question in one simple word, that for the quantity of AI that you want to use should be driven from the business outcomes you want to achieve. So in isolation, there's no limit, right? You could literally do anything, any machine learning algorithm. But who's going to use it? So unless there's a business case and business use you have clear in mind before you start, I think that's the starting point. And after that, there's no limit. Business can come up with any ideas, and then, of course, we're all there to support them, but that should be the starting point.
Thank you for that. I see 2 hands up. How do we go about this? PS, please shoot it in the shortest time you can.
Yeah, well, really appreciate the presentations. My name is Julius Moya. I am an external independent director of Equity Bank and a consultant with Anderson. Really appreciate the presentations. But Suki, you're talking about revenue assurance. Do we have space to move that a notch higher to either revenue maximization or revenue optimization? Then my second one is that there is one of the presentations you made about the future of data analytics. Very, very fantastic. Is there a way in which you can evaluate a bank in terms of how good it is in terms of that space of data analytics, such that there is an evaluative tool that can be used and banks can be gauging themselves, either with your help or using a tool that you have developed in terms of how they are doing in data analytics? Thank you.
Suki, before you respond, there was a hand here. Let's just take the last one and then we close it up.
Thank you. My name is Baiji from Prime Bank. It's not a question directed to anyone, but it's just like an open, innovative thought that I had. So sometime last month, when all banks were publishing their results, right, in the newspapers, there's one interesting article that I saw, basically from the year 2021 to I think the year 2024, particularly in the Kenyan market, the NPA overall, just I think as an average, rose from 11% to 16%, right? So just like a thought process to maybe Sunoida, and since we're talking about AI and ML, maybe would there be a model, maybe it's on your table, but would there be a model that would assist banks in Kenya to try and work on this particular NPA issue that currently the Kenyan market is running on? Thank you.
Thank you. Suki, you have 30 seconds to respond.
All three?
All three.
So to the first question, that's absolutely part of the mandate we take with banks in terms of revenue optimization, helping them in enhancement of revenue. And sometimes we also collaborate with some of our consulting partners. Companies like yourselves, ALPTech, they can contribute in that space as well to say, apart from what we are deploying in our revenue assurance platform, there could be pricing changes which the bank may want to do, learning from best practices of what other banks are doing. So that's something which definitely is part of the mandate as we look at enhancement and optimization of revenue. To the second question from Abdul. So predicting default and NPAs is something which is a work in progress at Sunoida. We're already building machine learning algorithms to help banks predict by product category or at a customer level ahead of time, giving you a probability of default for that customer in a certain window based upon their behavior, based upon their interactions with the bank, based upon their account balances, based upon the transactional activity, and based upon the external data available out in the market. Because they may be having facilities with your bank, but they may be closing out a lot of the other facilities, or their volumes may have dropped. So all these feed into the machine learning algorithm, which will help you in those predictions.
Thank you.
It was 60 seconds, I think.
You've done well. Let me invite my panelists each to give their parting shots, starting from Hellen, very briefly.
Thank you very much. KDIC comes in on these matters because we are called a risk minimizer. We were set up as a state corporation to provide deposit insurance protection for our depositors and also to manage banks when they fail. So the issue of data analytics and use of, for instance, the data warehouse is very critical for us because it helps us even in supporting the regulator on early interventions. So when we see the health of an institution is going down, we will have greater conversation with them to see ways of making sure that they do not fall into to a total failure to come for liquidation. So, with that and the use of data analytics, it would be very useful in trying to prevent bank failures going forward. And also the issue of AI that will help us in predicting the probability of failure of these banks. So if we are working with Sunoida, for instance, as we go forward, we look forward to working on this prediction so that we are able to determine, even using backward data, how long it would take for an institution based on the factors and the conditions that they're having and their likelihood of failure so that we can prepare ourselves as a deposit insurer. Thank you.
Thank you, Helen. Sir.
I just want to touch on the question around NPLs. So Abdullah, I'm not necessarily sure, at least I can't think of any real ideas from a data analytics point of view for the existing NPLs in the system. Now, there are different solutions around it, distressed debt funds, et cetera, but that's beyond the scope of this conversation. But I think use of data and AI should actually, if applied correctly, should fundamentally change your NPL profile going forward, right? I mean, use of alternative data in credit underwriting. You don't have to really wait for the company's financials to come at the end of the year to do the credit analysis. You can actually do it almost on a real-time basis if you build a good enough vector database. Things around predictive analytics, which Sukirat talked about. How is a credit likely to perform over the next 60, 90, 180 days? How can we actually structure facilities, loan facilities, in line with the actual cash flow of the company rather than giving them a 1 year or a 3 year term loan, and be a lot more nimble about structuring facilities as the cash flow profile of the company changes during the course of the year or over a period of time, right? So better analytics, better credit decisioning based on data, more non-financial consumption of more non-financial data will help make banks much more nimble, fast credit decisions, as well as structuring of facilities suitably to meet the requirements of the companies, and that should help banks manage NPLs going forward. So that's really, I would like to say that.
So back to the technology example. So I remember maybe more than 2 decades back, banks didn't have technology back in India, right? But there was a lot of resistance for the technology, against the technology. But then a decade later, it was literally impossible to think of a bank without technology, okay? Same is the story of analytics. The banks that have not started, or the organizations that have not started analytics, it will be difficult for them to try. And I don't foresee any organization without a full-fledged analytics stream serving each function, whether it's HR, whether it's risk, whether it's operations, whether it's business, without a fully blown data analytics work stream. So it is quite essential. You can't do away with it, okay? It's the new air. I won't call it fuel. It's the new air. You can't live without breathing, okay?
All right. Suki, close it for us.
I know we are waiting for drinks and dinner, so I won't take long. The only thing, based upon our 80 plus implementations, working with different banks, there's one clear factor which we see in banks, which is very different from some of the others, which results in the success of data analytics in those banks. And that factor is the use of data from the top. So all the C-levels in the bank, we have many customers like that, they will not use an Excel spreadsheet. They will not accept a number submitted through a system outside of the platform they are using to report any numbers. And that makes it imperative for a cascading effect on everybody in the organization, whether it's an RM. If the head of retail banking is looking at that dashboard, the RM better look at it, saying what my boss is going to look at. Yeah. So that for us is the single most critical factor, which results in a successful data-driven bank. And I think that's what I would say as the most important aspect.
Thank you very much. Friends, let's appreciate this panel for their insights. And let's all rise for a photo opportunity here.